How's it going, everyone? It's John here. I do videos on investing. We've got an investing video today. You're also going to see some videos on my channel with respect to short and medium term furnished rentals, vacation rentals, whatever you want to call them. I got 3 places in Southern California that I do that on, and I'm trying to do more and more content on that. You're also going to see some other videos too, like adventure travel and really even just active living. Because I got to do more than just sit behind the desk and work all the time. But basically, everybody, if you're new to the channel, I've been kind of developing a basket literally since early June of actually the top 50 turbo growth stocks that I like and that I'm following. And then from that, I've actually refined it and come up with a list of the top 10. There's always going to be one bonus in there, so 11 really, but the top 10 turbo growth tech stocks that could 10x in the next 1 to 10 years. I'll put some links below, and then I'll talk about more about that at the end. But today, what do we have? Well, what we have is I was going through my performance, and I was kind of getting a little bit excited. This was actually on Wednesday night. I was looking at the performance, and then Thursday as well. Basically, I was looking at a lot of different figures, and I've always pretty consistently. I've got multiple brokerage accounts, but my one brokerage account, which is the main one I focus on most of the time, is Merrill Edge, self-directed, and I've always pretty consistently beat the S&P 500 by 3x or more, right? But I was looking at an interesting time frame of January 1st of 2019 until present, right? So, and it was actually over 390%. So let's just say 400%, but let's just say it was a little bit over 390%. I did not do a video, of that particular performance, but I'm going to take you in today and I want to show you the performance right now. It's actually not as high because the market basically went down Thursday, Friday, and then even today, or at least my holdings, right? And I have a very unique style with respect to turbo growth investing, turbo growth tech investing. And I also have an email list. So, you might be somebody that's watching this from my email list. Thank you very much. And the reality is a lot of folks from my email list are, I do kind of internet marketing for things like, credit and credit cards, credit score, and things like loans, right? And a lot of times these people they just don't have the money line around to invest in the markets. So I wanted to take this and really put it into a model where if you were to save stock away something like $2,000 and be able to achieve this 390%, which is basically almost 160% a year return. I was starting to really break out the calculator, get excited, and like, oh my gosh, wait a minute, 390%, 400%. Divided by 31 months or whatever, that's basically almost 160%, per year return. That's really compelling, especially if you can do something like put $2,000 away, or I mean, I even did it with $1,000, but that's just such a small. I feel like if somebody's going to be able to save $1,000, they could also find a way to save $2,000, right? And I really modeled it out, 3 years, 4 years, 5 years, 6, 7 years, and not really too much past 7 years, but it's pretty compelling to see, that you could turn $2,000, into well over $1 million at the end of year 7. With 160% return per year. And then also you were to kind of change the numbers a little bit, turn $4,000, into well over $1 million in really only a couple years with something like an 80% return. So in any case, I do have a very different style and unique style in the way that I invest in turbo growth tech stocks, and I do understand that it's been a very, very massive bull run, certainly since 2000, really March of 2009 and 2010 and over the last couple of years, certainly. But I do have a very, very unique style that I actually developed from just myself being an entrepreneur, being an internet entrepreneur, and really focusing on things like gross profits and then also year-over-year revenue growth. And then a couple other things. I've got a 6-point scoring system when I actually score stocks. So let's go ahead and take a look right now at the performance so I can show this to you. And then after that, I'm going to take you just into a little spreadsheet so you can see some of the numbers of what I'm talking about and how compelling these numbers really are, okay? So let's do it real quick. All right, so let me go ahead and minimize my screen. All right, so here we go. So as you can see, basically it's just kind of, let me go up a little bit. So it's got 400 here. It starts here January 2019. This curve is the S&P 500, and then right here, right there at about 370. So it was over 390. I think it was like Wednesday night, over 390% for that actual time frame, as you can see. So yeah. So just kind of showing you kind of what it looks like here, January of 19 all the way to December 2020. S&P at that time about 83%. So here I am about 370%. Is that right? Yeah. So that's so even right there, it's almost beating the S&P 500 at almost fivefold, and been able to pretty consistently do that for a while. And I realized that January 19, 2019, it's kind of like a random thing to select. I was just going through. I really started investing more quite a bit in the summer 2017 because just of a particular real estate transaction I was able to exit at the time, and then started to kind of well, I mean, I've been investing for a long time, but this particular Merrill Edge account, that's how 2017 is when that started. But I was just kind of going through the different performance figures and looking at all the different numbers, and was really certainly surprised to see that level of performance. And then from there, I think that I've really developed my strategy over time. I always looked at gross profits, even going back to before around 2011 when I got into Netflix. 2011, 2012 when I got into Netflix, and they had a $3 billion market cap. But what we have here also is I want to show you this spreadsheet where if you take something like $2,000, and again, I realized 160% return per year is a little aggressive. The whole spirit of all this was I was actually sending an email out, and I was showing people that are on my email list what it really looks like, how you can actually amass a $10 million net worth, and that's make 150,000 and then stock away for 45 years, don't even touch it, and put it in an S&P 500 index fund. And then what's happened is the S&P has actually returned about just shy of 10% for the last 90 plus years. I mean, that's just a simple reality of tracing the performance of the S&P 500. So if you take that 150,000, you don't touch it for 45 years, you'll have 10 million, right? 45 years is obviously kind of a long time. Not a lot of people even know how to generate the 150 or actually save the 150, much less not touch it for 45 years. But that's really the spirit of it. I'm like, well, wait a minute. What if you could actually really actively manage things and do much better than that? And then that's when I started seeing my performance and then the reality of what we could do with these numbers. So if you take a look at it, I'm going to start with the most aggressive first. As you can see, $2,000 at 160% per 160% return. We're looking at basically some pretty compelling numbers. You say basically at the end of year year zero. So the end of year one, we're at 5,200. So let's say let's go to the end of year four. This is $2,000, everybody. 91,395. The end of year six, 617,832. The end of year seven, 1,606,362. Again, that's the end of year seven. It says year zero because you're essentially starting. You deposit the money in an account. That is the beginning of year zero, right? So after for the first full year, that 2,000 with 160% return is then 5,200. So that's pretty compelling. So if you go up a little bit, which I changed it here to 80% return with $4,000. Let's say if you found a way to stock away $2,000, maybe you could find a way to stock away $4,000. And at $4,000, at an 80% return, which is half of kind of what I've been doing, right? And you figure $4,000 at the end of year five, that's 75,583. At the end of year seven, that's 244,888. At the end of year eight, everybody, that's 440,798. And then all of a sudden, here we are at the end of 10 years, almost 1.5 million. Pretty amazing stuff, everybody. And the beautiful thing is that, it's great to not touch the money, but if you need the money here and there, you can actually access some of it over the years, or, obviously you're probably not going to be doing much. If you're actively investing, it's going to be hard to be achieving much better returns than this right here. But the point is that, if you need, a little bit of money here and there, you can do it. I mean, obviously you want to hang on to your job and everything like that as you do this, but it's pretty interesting, pretty compelling to really see what consistently high performance over time can really do with a small amount of money. If you want to increase that money a little bit, say, hey, maybe you can get your hand on something like $10,000. I'll change the numbers right here so you can see that 10,000 bucks at the 80% per year return, right? You're looking at the end of year 7, 612,220. At the end of year 8, you're looking at basically over 1,100,000. If you go down to my figure and say, okay, let's change that 2 to 10,000. You're looking at some pretty wild numbers, everybody. At the end of year 4, you're looking at 456,000, and that's not adding anything to the 10,000, right? The end of year 5, 1,188,000. The end of year 6, you're looking at over $3 million if you could keep up that 160, which I realize is probably going to be really super hard to do. That's why 80 might be a little bit more, realistic. But what might be realistic is actually being able to stock away a lot more than something like 10,000 bucks. So just a little bit of food for thought, everybody, and they're real numbers. These are real performance figures, and I realize that 160% per year return is really high. And very aggressive. And I might not be able to sustain that over a long period of time, but I have consistently outperformed the S&P 500 by around 3x, pretty much any way you cut it from now going back to summer 2017, which is about 4 years. So, they are, real numbers, and they do make sense when you plug them into a calculator and into a spreadsheet. Everybody, hopefully you like this. Just a little bit about me. I do have a background in investing. My first job out of college was Merrill Edge. Then I did some investment banking after that, and then I worked for Sun America in Los Angeles here for 3 years after all that. But I really haven't worked in the investment area in a really long time. I've got a great track record on my own. I've got an 80x return on Netflix when you actually look at their 52-week high, which I purchased in 2012 at the lowest share purchase price, and then also about a 33x on the Apple shares purchased in June of 2007. Before the first iPhone came out, and then I've got basically 3 others, so 5 total 10x's, on my actual track record. So I am a buy and hold, and I do have this kind of unique turbo growth tech stock approach. I'm actually been doing some videos on, really being like kind of a modern day really angel or VC investor, in the markets, because so many small tech companies are actually going public. And in a way, you have a better opportunity than even being a venture capitalist, right? If you can achieve 35% per year to your portfolio, in your capital, you're actually doing better than the venture capitalists, because the venture capitalists try to return about really around 25 to 30%, and they know that when they place their bets, they're only going to get their money back or even a return on their investment from 10 to 20% of their picks. And then for you, if you don't like it, if it's not performing for you, you could just sell it or just trim it down to 1 share or 2 shares or a couple shares. So in a lot of ways, if you kind of know what you're doing, and I'm looking at Yahoo Finance numbers, same thing that everybody else has access to, provided they have an internet connection and a laptop and a computer, right? If you really study things and you follow it, you can certainly do better than the venture capitalists out there. And to even be an angel investor or venture capitalist, I mean, the amount of money that you have you need to have is really out of control. Hopefully you guys like this. I'm going to put some links below. I came out with a blueprint recently on investing and credit. I'm going to put that link below. You can go check out those links if you want. It's only like $7. I've got a lot of guys in there as well. And also ask any questions in the comments area. If you guys like this, if you want to see more performance information, just let me know. Hit the like button, consider subscribing to the channel. And then also, yeah, it's 100% free to do all that stuff and also to leave a comment. Thank you very much, everybody, and have a great week.